All right, let's get into our first topic here, the accrued expenses. So we've all experienced this. You're going about your day and you get an email notification that says your cell phone bill is ready, or your internet bill is ready, or your utilities bill is ready. You open it and you see the following, and we're going to assume that it's a cell phone bill. The total amount owing, $95. The billing period from May the 18th to June the 17th. And the due date is July the 5th. And here's the question. What exactly just happened from an accounting perspective? Because if you just record, and you'll be tempted to do this, phone expense 95, cash 95, you're missing something very important. This is a postpaid expense, or an accrued expense, which means you used the service first, you're being billed after. So that $95 isn't just June expense or July expense. It actually represents value consumed over time. And that time is from May the 18th until June the 17th. So let's bring back our two timelines. The economic value timeline, this is used or says that you used your phone every day. The expense accumulated daily. And then we have the settlement timeline, where the bill arrives, payment happens later. These two timelines do not line up, and that's where accrual accounting comes in. So let's assume your month end is May the 31st. The bill covers May the 18th to May the 31st to June the 17th. So by May 31st, you've already used part of that service. Even though you haven't received the bill yet, you haven't paid anything. The journal entry at May 31st, which is an accrual, let's say the portion used is $40. So the entry is going to be that you'll debit phone expense for $40, and you're crediting accrued phone payable for the same $40. Now the bill arrives. The total is for $95. You already recorded $40. The remaining portion, $55, is for the June portion. So the journal entries that will be processed when the bill is recorded is that you'll debit the phone expense for $55. That's the portion that's attributable to June. You will credit accounts payable for $95. That accounts payable is the amount that is going to be due for the phone bill. And you will debit your accrued payable. This is to release the amount that was in your accrued payable as a credit, an amount owing that was attributed to the month before. So the account payable of 95 captures both the phone expense that's attributable to June and the accrued payable that was attributed to May and carried over as an obligation in the current month. So what just happened? You cleared the accrual, you recognized the remaining expense, and you now owe the full 95, which is in your accounts payable account. So now you pay the $95. You'll have the following journal entry. You're going to debit the accounts payable for $95. That represents the total amount that you owe. And you're going to credit cash for the $95. No new expense is recorded because the expense was already recognized, part in May and part in June. So if you didn't do this, May expenses would be too low and June expenses would be too high. Your financials would be distorted. With accrual, each period reflects reality. So anytime you see a bill after you've used something, think postpaid accrued expense. So when you see a bill, ask, when was this value actually consumed? Not, when am I paying it? Next, we go deeper into utilities, where you don't know the exact amount, you estimate, and then you reconcile. Accrued expenses aren't complicated, they're just recognizing reality before cash catches up.